Good morning. Welcome to the Hiremii Limited company update on the 19th of January. My name is Andrew Holmby, the Managing Director, and I am joined in the room by my colleagues Brad Cobus, CFO, and David Buckingham, one of our non-executive board members. So welcome to the update this morning. We'll be running through, I guess, our short progress today, some short-term, medium-term and long-term goals. We will be presenting to you guys and enabling some questions at the end. We'll do that through the chat function that you guys have access to, so please feel free throughout the presentation to start to fire your questions through, and we'll get that to at the end. David's going to manage the questions for us, so any curly ones, feel free, send them all through to us and we'll do our best to answer them at the end. Just going into a very short disclaimer. It's available. I'd encourage everybody to please have a read of that in your own time, and we will skip past that and jump straight into effectively the Hiremii Limited history. So most people in this room now have seen this slide before. It provides a short history, so I'll just pick out a couple of key things that we have in here at the moment. So back in 2017, on contractors, it was known back then, was accepted into the PwC Australia Business Align and Connect program, which was a key milestone for a very early business, a key success market. So we moved through into Hiremii platform launch and subsequently a labour hire agreement with UGL back in 2019. Last year we raised on the ASX 6 million and listed around May 2021. Very successful from an early start of the company. Later that year we acquired 100% of Inverse Group, which was a growing and successful recruitment organisation based here in WA. And taken to today, we have a new CEO and a new CFO, both of who are in the room now. We are ready to utilise the financing that we brought in through the recent raise and this one to enable us to launch into our next phase of growth, which we're very, very excited about. So we move to our next slide, just a little bit about the geography and locations of the Hiremii business. So with the acquisition of Inverse, we are quite well covered across Australia, but it also gives us a short footprint into Asia, Southeast Asia, through some existing contracts that we have in some key areas. So this, what you see in front of us, will be a focus for us in terms of developing and growing with both our existing clients and new clients, as we look to utilise the platform and the business that Inverse has brought to really power our growth over the next few months and years ahead. At the moment, we have approximately 100 registered and 40 active clients as of today. So we will be looking at leveraging those existing 100 registered and really getting a boost to our usage there. We can use that in a number of ways, which we will talk to a little bit more in the slides ahead. So our near-term focus for, as we sort of lunge into Q3 this year, I think our immediate focus in front of myself and Brad and the leadership team has been the integration and launching the Hiremii technology product. So to date, we have a growing recruitment business on one side. Our primary focus is to enable the usage of our technology to really leverage that to provide strong growth within the company. So a couple of things that we have in front of us. We have two strong brands coming together. Our job is to integrate those two brands and the client service offering that we have. The Hiremii brand, the future SaaS, leading with technology and products and services, that's a focus that we will have in the business to talk to our existing clients, utilise that client base, the trust that has been built there over a number of years, to start to deploy and use technology within those areas. The on-contractor, legacy on-contractor and Inverse, we will be looking to consolidate under, I guess, the larger Inverse brand. The reason we'll be doing that is Inverse is a very strong recruitment brand. Hiremii is a very strong technology brand. And we'd really like to have technology as the front and center of what we do. Inverse, we're very lucky we have a strong business in the background that can help us to leverage off that, utilize that strong relationships that the company has to really take us on again to the next steps. The focus of the amalgamated on-contractor and Inverse business will be to support clients, particularly in a tier one, future of mines, future of energy and digital areas, with a focus on white collar and technical positions. With moving on to number 2, the reorganization of recruitment staff and client services portfolio. But we have an opportunity to really leverage 2 strong account management books. We'll be doing that to, again, further enable our growth. We have the ability to access a much wider pool of clients. And obviously, we're all unaware of the COVID look ahead, but we have an optimistic view. Come the 5th of February, at least we're starting to work towards open borders again. As I said, we are fairly diverse in terms of our geography. We're not just reliant on WA, but it'll certainly be nice for us to open our borders and see what the future looks like. We're well positioned, we think, to be strong on the defensive side if there's challenges, and very much exposed to what we see as upside potential from the 5th of February. Moving into number 3, so delivering on our integration benefits. We, myself, Brad, and the leadership team, we have identified headcount, property, IT, and corporate costs that we are looking to amalgamate into one. We will be looking at being fairly aggressive in identifying our monthly cash burn and looking to reduce that. Our target is to try and reduce that by a third, and approximately 100,000 a month. We think that's achievable. That'll be achieved both through the reductions we've mentioned, but also in the increase in GP and a focus of the recruitment business to really build a high margin business that we can utilize. So it's not all on the negative side. There's a positioning that we will be looking to do for growth as well. Launching the Hiremii technology offer to our existing and new clients. We have identified over the past couple of weeks, but also for the benefit of everyone in the room. Myself, I've been involved with on-contractor and Hiremii for a number of years. The reason I invested in the first place was because this is a strong technology proposition, and we can see the opportunity to really leverage that to disrupt an extremely large market. We've identified shortlist mean as being the first module within our broader portfolio. We are of the view that we would like to get this into our clients, get them using it, get the feedback, get validation, get testing, so that we can really start to build both our trust and the working relationship with our clients on the technology side. We've put in a number there as a 50k investment required to complete that. We have identified that 50k will be used predominantly in our development side. A lot of the back office stuff is already done. This is about working with our clients to really get this from a UX UI perspective up and running. So we're not a million miles away. That's our target for this quarter. And we are already in discussions with a couple of key clients. The key clients that we are in discussions with, and certainly will be targeting going forward, are large multinationals who have a large workforce and a large demand on their skill base from their own clients. So exciting customers to be working with. We'll be fine-tuning the product, and we'll be moving to a sales launch in Q4 this year. Cool. So our medium-term focus for 2022 and beyond, we have identified that we have a really good portfolio of digital assets. The focus on that area will be the expansion of our SaaS platform. We'll be increasing the number of trials that we're doing with our clients, commercializing where possible, and looking to build that. And we'll be growing our volume of candidates through AI, improving accuracy and learning models, which effectively we have a very strong AI proposition. It's really about data and putting the data in and working with this to really get those efficiencies right. That's going to be a nice focus on the technology side. Now on the East Coast, we already have a presence in Victoria. It's a very strong presence on the traditional recruitment side. The person we have heading the business over there has a very good understanding of technology usage and how we can leverage existing recruitment clients to really take that both from a digital technology and a recruitment growth opportunity. So we're looking to identify opportunities that we can prudently grow over into Victoria. We're working with that person at the moment. We're very excited about what we have, and we already have a good footprint. We'll be leveraging off that over the next 6 months plus, and that's part of our medium-term journey going forward. Growing our client portfolio and converting that to revenue growth, look, that's a continued focus. We have a strong strategy in that area, which I've outlined briefly just in the previous couple of slides. Look, we will be considering new attractive sectors. We think our technology that we have, once we're into the market, it has other cases that we feel have a strong opportunity. Healthcare is one, banking and finance, government, etc. Anywhere where there's high compliance, large volume of people are required to enable that industry to be successful is on our radar. So that's our medium term. So with our new leadership team, as you can see, there's a couple of new faces into that team already. We're very excited about the team that we have. We do have deep and significant sector knowledge. A lot of that sector knowledge comes from the recruitment sector. So we understand the areas, the processes that the recruitment sector works with, to understand the key areas that we can really disrupt this through our technology offering. We have a very excited team of leadership that is looking forward to taking the technology platform forward. So we have our board of directors, which I've introduced David already. We have Alison Gaines as our chair, and we have Connor as our fellow board member. Below, we have myself as managing director, CEO, and Susan Parker as our company secretary. The leadership team under there, we have four, which is geographically dispersed. We have Brad Cobus, our CFO, who's in the room. Brad has extensive ASX experience as a CFO. So far, we've been working together for 2 weeks. It's been going very well, I'm pleased to say, and we're very excited about where we're heading with Hiremii. Chris Flynn, who was the Inverse COO, all-round good guy, knows everything there is to know about the recruitment sector. He'll be incredibly important for us and our continued growth in the West. Jade Stokes, also of a very similar background to Chris Flynn, is heading up our East Coast expansion. Jade is a phenomenal resource and really understands the technology as well as traditional recruitment. And we have Bronson Pratt as our IT and product manager. And Bronson's sits in the office with us. He's been working, supporting and managing the development of our platform, and he's been working with our consultants. So we have a group of extremely talented consultants who have helped us on our journey so far. So that's a brief about the leadership team. Our technology opportunity, and this, some of you will have seen part of this slide in the past. Just to talk to this a wee bit, we have identified ShortlistMe as being a tool, and I'm happy to answer a few questions if people like a bit more detail about ShortlistMe. But essentially, you can see on the left-hand side, there's a number of areas that are quite labor-intensive and they're quite manual in terms of the recruitment sector. Sourcing applications, processing of those applications, matching those applications to roles and screening those roles to come across, to come up with a shortlist. There's a number of hours that it takes a traditional recruiter to achieve those things. We have identified ShortlistMe that covers off potentially all four of those things on the left-hand side: automated job advertising, CV parsing, semantic matching, instant skills and experience matching, and our AI agent candidate screening, which is something that we're looking to continue to focus on as we progress further throughout this year. ShortlistMe really gives our clients an opportunity to extensively reduce the number of hours that it goes in to considering what a shortlist is, collecting that data, running through that shortlist manually, and providing a shortlist of high quality people to the hiring managers within the respective organisations. We have identified Shortcuts as an opportunity to potentially monetize, commercialize at some point this year, but certainly launch as a pilot. We are through a discussion, advanced talks, I guess, at the moment with a particular notable client, and we're learning as we go there and hoping to be able to make some form of announcement in the future. Okay, inverse acquisition. I'm going to pass the reins to my colleague Barcodus and just to talk through a wee bit about the inverse acquisition.
Right, so thanks, Andy. The inverse acquisition was announced on the 5th of November, and so we've been working to bring that business into the fold. And effectively, we'll see around a month's worth of profit or P&L coming through as a result of that acquisition. What you can clearly see is that there's been strong growth in WA over the last 18 months, and there's plenty of incentive to ensure that that continues to happen, which were included as part of the arrangements. So we expect that that would continue to, we would continue to see that strong growth going forward. It is currently operating at near break even, so no significant cash drain on the group. As the revenue moves up, clearly a good portion of that moves through to the cash balance. So in other words, starts to support whatever corporate and technical investments we're making. There are clearly some synergies available, and that really talks through a good investment case. Firstly, around using the AI capability to enhance the productivity. So we'll be using that AI technology to drive the productivity, as well as to ensure that the process or the use of that system is enhanced as we leverage it. And clearly there's back office support that's already in place within Hiremii, and so leveraging of that's going to be important, and then consolidating suppliers across the businesses. So I suppose what it also is adding is that because of the additional scale, that does allow us to consolidate suppliers and leverage that. So ultimately, as a business, Inverse provides a really good opportunity. It's a scaled recruitment business, and we can now bring to bear the technology offers against the client list, and synergistically move both businesses forward as well.
Yeah, look, and to I guess talk a little bit more about Inverse in terms of the company to date. It was founded in 2017 as well. Myself and Chris Flint built the Inverse business around working with large tier 1 clients with a future view of their own industries, their own sectors, and their own businesses. So we have a suite of extremely high quality, valuable tier 1 clients. A lot of those clients already are working on projects of the future, anything from space and robotics to mine sites of the future. So we're talking the same language with those clients when we talk about disrupting the recruitment sector. In the energy resources and digital sectors, there's been an awful lot of change, and the recruitment sector is really one that hasn't kept pace with that change. So we've identified with this acquisition that it will enable us to have strong conversations, enable us to start to pilot digital recruitment solutions to those companies who are already talking the same language and understanding. It's a very strong business. We can see the growth that's been achieved since 2017. We would like to think that we can continue that growth going forward. Thank you. So to provide I guess a short summary of what we've just discussed, and what I guess why we're talking to you guys today, and why we feel that we're well positioned for the future. We have a new executive leadership team It has a deep operating and sector experience, both from a recruitment and a technology understanding perspective. We've got the right team in place. The integration with Inverse will be completed quickly, and we will be realizing those synergies and benefits to create lower cash burn and trying to move this as close as we can to a break-even point. That's an aggressive target that I'm setting myself as the managing director. I'm also Brad as the CFO. We're very much aligned with spending our money wisely as we go forward. The technology product set to be launched and piloted with our customers, and the technology offer to expand over time. We want the business to focus on technology development. We're very fortunate we have a strong recruitment business that will underpin that and enable us to talk to those clients, leverage those strong relationships. But our focus primarily is to expand and build on the digital product that's been built today. As COVID restrictions on labour movements set to ease, look, there might be some short-term pain, but we feel that that will provide a long-term gain in terms of the movement of people around Australia. I think we have seen on a global basis that other countries have started to move out and are kind of getting on with it at this stage. And we'd like to think Australia will be there soon as well. As I said, we have a very strong position in our diverse geography, so we feel we're well placed. But the finance that we have in place at the moment is there to support our future growth needs. Those will be spent predominantly in developing and commercializing our technology, while the recruitment sector, the recruitment part of our business, will be underpinning the growth of not just the growth of our top line, but the increase in margins and the improvement in the bottom line for the business to go forward. We've obviously had a recent successful placement, and we're looking at the SPP that was launched today to welcome further investment from key existing investors. There'll be a quarterly update in late January, and we will probably be presenting something on these lines again at that point. We'll be trying to make sure that we're communicating effectively with our investors throughout. We do appreciate the support we have from our investors. Brad and I are coming into the business now. It's a reset for us, and we'll be focused on positivity going forward and getting the right message and the right communication to everyone here. So effectively, we are reorganized, reset, and ready to drive our growth for the near, mid, and long term. So thank you very much, guys. We'll turn to David. I'm sure there's some questions that everybody has. We'll be all jumping in, the three of us, to answer those questions as best as we can, and certainly appreciate your time today. And look forward to meeting people in person and speaking to you guys a little bit more as we go forward.
Okay, well, let me see if I can do this. So if you've got questions, if I'm about to access the chat room, there's only one question in there at the moment, so this can take a bit of time to feed these through. So if you hopefully you're typing away if you've got any questions for Brad, Andy and Brad, but I'll jump in anyway with the one that we've got so far. So what was the reason for the management changes is a question here. Look, I mean, as a member of the board, I'll touch on that briefly. I think we got to a position where, and same questions just come in again from somebody else in relation to Chris. I'm just making sure I pick up all components of that question as well. So Chris did a great job in developing the business and getting it ready for market. His background was predominantly in that space, and you know, he did a fantastic job through 2019 and 20, bringing the business to market and getting it set to operate going forward. When we got to the end of last year, we obviously bought Inverse, which significantly increased the scale of the business. Now, I appreciate that shareholders haven't seen that yet because we haven't reported results. But when you do see the results starting to come through with the Inverse business in it, you'll realise that it's the predominant part of the business. And Chris's background wasn't in wasn't deep in operating recruitment, whereas Andy lived and breathed that through 3 years, through 2017 to 2020. So the board felt we needed to make that change and move towards operating experience, deep operating experience in the sector, with the relationships with clients that we could then sell the technology through. And again, I'd like to say in relation to Chris, fantastic at building the technology and helping the company find the funds and lead us through the build of the technology. But the skill in selling that is being in front of clients, existing recruitment clients. And so that's the background to the change.
Cool. There was, I think that answered question 1 and 2. I think in terms of question 3, David.
Let me just increase the size of this. There you go.
Okay. All right. Okay. 3. Look, in terms of question 3, we did vote in May. What's happened to those IPO funds? I can't speak to.
Shall I jump in?
Yeah.
Yeah. Oh, well, I mean, the first response there is this: we've still got a considerable amount of those funds available. I think from memory, about a third of the 6 million was sitting in the bank at the end of December. We'll give the exact number come the quarterly results. So the other portion of those funds was spent. I mean, the business is not cash flow positive for a start in its operations. So a portion would have been spent on the cost of the operating costs of running the business. A portion was spent on developing the technology to the stage it's at now. And then obviously a final portion, probably the largest, was spent on the acquisition price, the initial acquisition price for the purchase of the Inverse acquisition. And because of that, obviously that opportunity coming along so quickly, we're kind of back in market now, financing to grow going forward.
And I mean, more specific numbers will be in the 4C and the operating uptake in the.
Are the founders still involved in the business? So look, let me just speak to that. So in terms of the business was conceptually, in terms of its idea, was founded by an individual that I also know, and originally was the reason why I got involved in the business early from an investment perspective. So going back to 2017, there was 3 people. And in terms of their involvement, Connor O'Brien, who sits on the board, is still involved. I still have my full original investment that was made in 2017. I'd like to see that become a larger investment than what it looks like today, and that's my job to turn around. And the other chap, Alistair Haldane, he's still one of our largest investors and a shareholder today. So in terms of the founders in the business, yes, there's a group of investors, including myself, that were there early and we're still here. And we're looking to really take this business forward, as I said during the slide. So yeah, very much still involved. In terms of the capital raise, I'll probably allow David to jump in.
There's, you don't get to pick your times for capital raise as much as you'd like. It's simply due to what I explained a minute ago, in the sense that we felt that we needed to regrow our cash balance to fund the growth going forward into this year. And we got down to the point where after the acquisition, where we felt we needed to come to market. Unfortunately, it's not a great time in terms of the share price. Nobody either invested or in the business to date wants to be raising capital at low prices, including myself as a shareholder. But unfortunately, we need to grow the business in 2022 and beyond, and we're going to need more capital than we've got in the bank balance right now.
Yeah, and we have a strong strategy that we'll start to communicate more effectively with our shareholders. I guess this touches on the share price level today, and also to answer in terms of how do we anticipate the market perception of HMI going forward. we are where we are today. Brad and I come into this business. We have tools at our disposal. We have a very strong leadership team. Underpinning that leadership team, we have an amazingly strong recruitment business and people within that. We'll be increasing the margins overall in the business. We'll be growing that organically, and that will help us to come to market with, I think, what will be improved results going forward. I guess with that, there's a bit of trust that we need to rebuild with HMI. I am an investor as well. I have continued as an investor. I bought more recently that would have been announced on the market, and we all would like to see the share price higher going forward. That's part of our jobs, is to rebuild trust with shareholders, both existing shareholders and potentially new shareholders. And we'll be doing that by communicating better. We'll be doing that by improving the results, being more transparent about the improvement of results. And we believe that trust may take some time, but that's our jobs to start rebuilding. We think we've got the right strategy going forward to do that. Touching on UGL contracts, going to continue. We still have an agreement in place with UGL. We still have existing contractors, I believe, in the business with UGL. The contract that was lost was a very specific contract that obviously enabled us to build an early revenue growth within the business. In our 100 clients that we have and are 40 active, we have a number of clients that are similar in size and structure to UGL, which give us some great opportunities going forward. We are no longer exposed to one client in a way that we were with UGL. We have a diversity of some extremely high quality global clients with hundreds of thousands of people involved. And we'll be looking to leverage those as we go forward. Hopefully that answers that question. In terms of cash flow,
in terms of cash flow projections, there's a question earlier from Sana. We're not giving projections. Simple answer to that question. We want to, I can assure you, the board and management team want to get to cash flow break even as quickly as we can. But we're resetting the business right now, having just done an acquisition that double the size of the previous business in terms of revenue. So we've got to work through integration, and growth has been certainly in the Hiremii portion of the business been difficult because of COVID restrictions and things like the loss of the UGL, one portion of the UGL contract. So until we get a clearer understanding of the trajectory of the business, there's no point in us giving forecasts, quite frankly. There's a question there from that kind of covers the other question around cash flow and cash flow positive. There's a question there from Ian around, will the founders, directors and management be taking up their full SPP entitlements? Andrew has obviously mentioned his position. We've made it a very clear indication in the SPP announcement, or the placement in the SPP announcement a couple of weeks ago, that directors intend to take part. I personally will, and I'm aware of other directors taking part. We don't get the opportunity very often, and particularly with the 6 months we've just been through with an acquisition and various other things going on. So I'm keen to take part.
Yeah, it's an individual decision, I guess, for people. I can't speak on behalf of everybody. I will be taking up the SPP entitlements, and going forward, we're very much invested in improving the business. We think it's a good opportunity at this level to get ourselves well positioned. Paul, thanks for the kind words there, Paul. How long does it anticipate being possible cash flow positivity to be reached, and what is the company doing to stem cash burn? Half of my family is Scottish and the other half from the north of England, so every pound and every dollar is important to me personally. That culture of spending money prudently will be driven across the business. I think Brad joked the other day that it's usually the CFO's job to say no to spend. I'm already saying no to things that are not important to be used to take this business forward. So I can't necessarily say at this stage, we've been in a job for 2 weeks. when will we be cash flow positive? And we're trying our best to get as close as we can to that as quickly as possible. That's our primary objective within the business, to spend money sensibly and to see that cash burn reduce quite heavily. We touched on it earlier on in the slides, but we'll continue.
Look, at the moment, we haven't put out recent quarterly numbers, so they're coming out at the end of this month, and you know, that'll give, as Brad mentioned earlier, a very clear indication of what's happened with cash in the last quarter, as well as giving shareholders an indication of our burn rate. Now that's to the end of December, obviously, and integration's only really just started in the last week. You've seen the number that we've talked about in the presentation, so you can work from the quarterly number that we put out for December, add in the benefit we're hoping to achieve in the presentation to give yourself an idea of the burn rate going forward. I think any more than that right now is probably too early to say. We obviously, as Andy said, want to make sure we get there as quickly as possible and as prudently as possible.
If I can also just chip in, I think the 2 points we tried to make in the appraisal were the integration benefits. So clearly where some of the resources were focused on building up a recruitment business in blue collar and high volume, that focus is being adjusted to more focus on the inverse type business. So that's just on the resourcing in relation to that. And then in terms of the emphasis with technology, moving from a sort of a heavy development spend month on month, pausing that to some extent and starting to commercialize is also an important point in relation to cash flow.
Absolutely. Emily, in terms of the industries that our major clients are in, so the inverse group, which will become the operational recruitment part of the business, operates in 3 areas: energy, which is traditional oil and gas, and new energy. So we've captured already key hydrogen, ammonia type opportunities in that space. On the resources side, we're very much aligned towards mines for the future. We're working with companies at the moment who are developing things like battery metals to support global supply chains when it comes to electric vehicles and such like. We're working with organizations that are involved in space robotics programs, which is fantastic. And our digital business is not as industry focused. We are supporting some of what I'd say is Australia's most entrepreneurial technology companies, and particularly some of WA in that space as well. So we're really excited about that. In terms of around our target margins, look, we've mentioned not just our revenue growth, but the target margins a couple of times in the slides. We are moving away from low cost activity in recruitment, which we don't believe is the right strategy for the present market. And we are focused on delivering a higher quality technical and specialist, which also gives us volume, but it's a higher margin area for our recruitment business. We're well positioned there. We have a good, strong strategy, and the increased margins will hopefully start to come through, and you'll see that in our future announcements to the marketplace.
And clearly that's focused on the recruitment side of the business, which is as much as we have in terms of revenue at the moment. But clearly the tech side of the business is a whole different picture, and that's obviously the focus as well.
Absolutely. Yeah, absolutely. Yeah, in terms of look, key reasons why we believe shareholders should support the SVP. I guess in terms of going back to the summary there, we have a very strong leadership team. We have a strong recruitment team underpinning what we're doing. We have and are building towards a aligned strategy to commercializing our technology. We're working with the partners who have helped us to build the product to make sure that at each step we can clearly, concisely communicate what we're doing to our potential clients. We're leveraging off the recruitment business and understanding to be able to go in and commercialize, pilot, test, validate what we're doing on the product side. We believe that we've got a leadership team now that are refocused on growth, but growth in a prudent way. And we believe it's a great time to be taking this business forward. There's very much a firm reset of what was done in the past, taking those good things, moving that positively forward, taking some of the things that weren't done as successfully and either readjusting that or stopping it completely. But we feel it's a good time, hopefully.
Yeah, I mean, I think an important insight is that there's been a significant investment in what's now become really useful AI. The focus shifting to deploying that product content, continuing to invest in that, we believe, that's where the real benefit lies now, that investment's been made, and now going forward, we look to monetize, which is a good place to be. And that's not to say we're going to continue to develop, but more as a customer responsive kind of mode, which I think is a good mode to be in. So, yeah, I think the forward look on the tech is an important part of it.
Yeah, I guess we feel that there was a strategy of building the gold-plated product and then taking that to market. There is some phenomenal technology that we have at our disposal. We need to put further understanding on how that truly goes in and positively disrupts the recruitment sector. And our job is to take those in, to pilot these, to start working through our validation with our clients and really taking the technology forward. That a lot of this has been built already and it's at our disposal. And the plan is now to look at how do we commercialize that in our business. We're very excited on the technology piece, and we do believe it's disruptive technology that we have at our disposal. I'm very excited about the year ahead.
One more question there.
Simon, last question. Shortage of labour helps to affect your business. It's possibly neutral to a degree for Sana. WA is still, by geography, our largest opportunity. From a recruitment standpoint, we're all locked in together. There is a shortage, which means that there's high demand, there's higher wages being paid, which increase our opportunity to increase our margin. It's a net effect, to be honest with you.
And then I think one thing to maybe just bake into that is part of the value proposition of the technology is really quick turnaround times. And so responsiveness in a short market means you're probably on your front foot. I think that's a positive as well.
Be quick, there's a couple more questions just popped up there at the end.
Okay.
So let's get those out of the way and then we'll wrap up.
The inverse group profitability, I looked at CFO and I'm working through that at the moment, and I think we'll be able to present more information on that as it is announced to the market. But it's a strong business. It has been a growing business as well, so we'll present.
As we said earlier, it's operating at near break even, so it gives you a sense. Is any of the tech you've spoken of patented? Yes, from memory. I can't remember which and where.
Look, the technology we've been developing is it's owned, it's our proprietary technology.
Yep.
I believe there is, by virtue of it being ours and being longer than 1 year, that we have a patent opportunity. I don't know if we've gone through a trade.
We haven't gone through a proper stage. Yeah, but the IP is owned by the company.
The IP is owned by us, and that is something we will be looking at in the short term, to ensure that we are well protected, but we believe we are at the moment.
Final question there.
Yeah,
Well.
look, final question on consider it a disruptive technology and how realistic the technology being able to disrupt. What we have in a live environment with a potential client already demonstrated what this can do and how it is disruptive. It's certainly disruptive in a way that it quite clearly reduces the time effect of making a hire or a number of hires. And that can be rolled out exponentially with a client who, say, for example, is hiring maybe 20 to 30 people a week. The hours that it can potentially save that client and the cost of the actual recruitment process is significantly reduced through working with ShortlistMe, and only ShortlistMe as a standalone module. It is absolutely able to be disruptive as a technology. It is something that we can use in here, something our clients can use. I believe it's where the industry will be going in the future, and adopting AI, artificial intelligence, to make the same decisions as humans are making, but effectively a lot faster. So it is a huge opportunity for us. Okay. Look, I'd like to say again, thank you to everyone for joining us. We do look forward to engaging with you guys further in the future. We do want to build that trust with our shareholders, both existing and new. We look forward to presenting the information over key milestones as we go. And if anyone would like to personally reach out to David, Brad, and myself, our emails will be made available, and we do look forward to talking to you. And thanks again for your patience, your investment, and the opportunity to present. Thanks, guys. Cheers.